Hello guys, welcome back to another video. Now today's video we're going to run through the advanced butterfly formation. So if you go to my website ottrades.com and to the top here, advanced butterfly pattern, and we're going to run through the manual setup on how to identify these patterns, so B, C and D points, as well as the conventional targets and stop loss levels as well. So we'll get straight into this. So obviously price is going to start with an initial price swing. Now this initial price swing is the X to A leg. This could be bullish or bearish, and that initial price swing is going to obviously determine on which direction we're looking for the pattern to complete at. So the initial price swing from the X to A point, I'll put these on here. That's the X point, okay, and up to the A point. Okay. So we're looking for that initial price swing in the market to form our first leg. Now this obviously isn't determined by any Fibonacci retracements. The first point to be determined by fib levels is the B point. So take our fib retracement tool and stretch it from the X up to the A leg. So from X here to A here. These lines are just projected off so you can see the price better. So from the X to A leg, you can go to ottrades.com and check that the market forms the B point if it touches at least a 786 retracement of the XA leg and does not touch the X point. So we're looking for a retracement back down of at least 786 or 78.6% of that X to A move up, and price cannot exceed 100%, or that is the X point essentially. So 100% retracement of this X to A push up is going to be that X point there. So at least 786 to 100%. So we're looking for price. The B point can fall anywhere in this red box here, so long as it touches, even if a candle wick exceeds that 786, but the candle then pushes back up to close above that 786, that wick, the lowest point, or the price extreme, the lowest price extreme is going to be that B point before we look for a reversal up to the C point. The same here, the wick cannot exceed the X point. So you can't have price, any price, so the wick, even if the wick goes down and closes back up, this should not count now. Okay, so the opposite of that 786. Price cannot exceed X. No matter if it's the wick or the close price, price cannot exceed X. Whereas here, the wick can go in and price can close above it. It can't happen here. So we're looking for that 786 to 100% retracement here to form our B point. I'll just put that in here. And now moving on to the C point. So the market forms a C point if it touches at least a 382 retracement of the AB leg now. So no longer on XA, we're on the most recent leg, and that's the AB leg. And it does not exceed the A point. So again, that's going to be 100%. So we're now moving on from this price swing to work out the B retracement. We're now moving on to the next price swing, this A to B leg, to work out the C retracement. So if I pull our Fibonacci tool from A down to B, so it said we need at least a 382 retracement of A to B, and it cannot exceed A or 100%, or a 1 here on the Fib retracement tool. So here we've got quite a broad fib level that we can look for a retracement back into. So you can have a retracement anywhere within this red box here. So this zone here can be our C point. So even if price exceeds this, again, the wick can exceed the 382 and price can close below it, that's fine. But up here, we cannot have price exceed that A point at all. So the wick cannot go past this A point. So we can have the candle, the C point form anywhere from this level here. So the C point would look like that, all the way up to 99.9% here, so that the C point could look like that. So it's quite a broad range that we're looking for. So I'll put it somewhere in the middle here, and that's going to be our C point. Just label that up here. And then finally, we're going to move on to D point. So D comes as a 127.2 extension of the AB leg. So using the same leg as before that we used to calculate the C point, we're now using the extension tool, going from A to B, and we are looking for the 1272 of A to B. I'll remove the 1618 for now as well. So we're looking for that 1272 extension of A to B. So our D point completes here. So we can now draw this in. That is our butterfly pattern. I hope that makes sense, guys. So our D point forms at the 1272 extension of A to B. Now conventionally, this is again on my website, conventionally the D point is a reversal point. So in these advanced patterns, if you watch the harmonic pattern videos that explain that as well, or go on to the website and have a look at them as well at the bottom here. But for advanced patterns, we set the D point as limit orders, and we're looking for reversals here, hence the limit orders. So we're looking for price to bounce off of this level. It's not going to be exact, it's going to be higher or lower than this level, but we're looking price to bounce off of this level and move in the opposite direction. So we're looking for a move up in this case, or a bullish move higher, price to move higher. So we would set limit orders at this point, and we would set our targets at the 382 of the A to D leg, and the second target's at the 618 of the A to D leg. So from A, we stretch our fib tool down to D, and our targets are going to be at the 382, target 1, and the 618, target 2. Roughly about that. So 382 target 1, 618 target 2, that's what we're looking for. Now if price were to, just making a candlestick here, so if this is our candlestick, here, so price has obviously exceeded that D point here, so price has moved down, it's then pulled back up and closed below the D point. We would have obviously have had that limit order set at the D point, waiting for a price to move higher, but because now price has exceeded that D point, it's not yet hit our stop loss, which we'll come on to in a second, it's not yet hit our stop loss, we want to adjust our targets according to the price extremes. So as price moves lower, we want to be dragging our fib retracement tool to the new price extremes. So this Fibonacci retracements tend to be used for price swings, so we want to capture the entire movement down, if that makes sense. So from ignoring this pullback to the C point here, we want to be capturing the entire movement down. So there's no point leaving it up here because price has continued to move lower. So we want to capture this entire move down. So if price continues to move against us, we'll keep retracing these Fibonacci levels lower and lower and lower until eventually we're either stopped out or price stops retracing, and we adjust our targets to the 382 and the 618 again. So the new targets will be moved lower and lower and lower. Eventually, if we do our stop loss now, so the stops are going to be based on like I said here, this is just for the butterfly pattern, the butterfly advanced pattern based on my back testing. I back tested thousands of trades, and I've come to the conclusion that the 1618 extension of XA works better for the stop loss levels rather than the conventional 1414 level. This is mostly because it gives room for movement. In this instance, where price exceeds the D point, price tends to move lower, and the 1414 doesn't give you much room for movement. So if we do the A to D leg, 1618 X to A, sorry, X to A. The 1414 doesn't tend to give you much room for movement, so the 1618 gives you that extra buffer for price to retrace lower before making that bounce off of the D area. So I found it worked better to have a lower risk to reward ratio. Obviously here you're risking less for the 1414, making your profits greater. Whereas here you're risking more, which is lowering your risk to reward ratio, but you're more likely to win more often, and in doing so that does tend to work in your favor. And this is just for the butterfly pattern, like I said, the advanced butterfly. I haven't done this for any other ones, but the 1618 I've said tends to work better. So if our stops are at the 1618 level, we would continue to adjust our targets from the A to D leg, continue to adjust them all the way down until we're eventually either stopped out or price reverses. And that is the butterfly pattern. I suggest you go back through and back test this yourself. You might find that you have better, you're more profitable if you trade the 382 or the 50% retracement level, the 5.500 level, rather than the 618. You might also find that it's better to not move your stop loss to break even once the first target's hit. So conventionally, the fib retracement tool should be restretched from the new price extreme to D. If target 1 is, that's what we just went through. If target 1 is hit, conventional rule state half the position should be closed, and the stop loss for the remaining half should be placed at the original entry point or break even. So once we've entered this trade, we've entered at a limit order at the D point, price has moved against us, so we've stretched our Fibonacci retracement lower, price has then moved higher, it's hit our initial profit targets, we've then moved our stop loss from the 0.618 level here, we've moved our stop loss up to break even, or our entry point, so that's going to be at the D point. So our stops are now here, so price may then retrace back down and cut us out at break even. So we would have taken profits at the 382 and closed half of our position, taken half of our position in profits, and moved our stops to break even, so that the next half of the position is either cut out at 0, or we continue to move higher and hit our second targets. You might find that in your back testing, price tends to do this, so it hits our first target and then moves back down to form a double bottom or something like that, where prices come down to here, hit the 382 and form the double bottom here before moving higher and hitting 618. So you might find that in your back testing you don't want to move your stops to break even, even if you just adjust them from that 1618 to maybe a 1272 of the XA. Remember the 1272 of AB as the D point, so you could do it at the 1272 of the XA, could adjust it so it's slightly higher but it's still got room for movement. that's entirely up to you. That's up to your back testing strategies. But this is a conventional way of doing it. So yeah, that's the butterfly pattern. I hope everything makes sense there. Any questions, go to my website as per usual. Leave your name and email address here. Ask away. They come directly to myself. Willing to help with any questions you might have. But I hope this video has been informative. Thank you very much for watching again. See you next time. Thank you. Cheers for that.